Hey everyone, welcome back to Corporate Decoder. Today we're diving into a Schedule 14A filing. Don't worry, it's not as scary as it sounds. Think of it as a corporate treasure map, but instead of gold, we're hunting for insights into how BrightSpring Health Services plans to run its business and compensate its top executives. And trust me, there's always something interesting buried in these documents, even if it's just a good laugh at the legal jargon. This document is basically a notice for BrightSpring's annual meeting, set for May 28, 2025. Shareholders get to vote on some important stuff, electing directors, approving their accounting firm, and giving a thumbs up or thumbs down to how much the top bosses get paid. It's like a school election, but with bigger stakes and more complicated rules. This is a definitive proxy statement, meaning it's the final version sent to shareholders, not just a preliminary peek. They're asking for your vote on a few key items. First, they want you to pick 2 people for their board of directors to stick around until 2028. Then they want you to say okay to their choice of KPMG LLT as their accounting firm for the year. Finally, there are a few non-binding votes on how much their top executives are making and how often you get to weigh in on that. Time to meet the candidates. They're asking you to elect Johnny Kim and Timothy Wicks to the board. Kim, 34, is a director at KKR & Co., a big investment firm, and has been on BrightSpring's board since 2019. He's on other boards too, like Global Medical Response and Therapy Brands. Basically, he knows healthcare and finance. Wicks, age 59, is an independent director who joined the board in April 2024. He used to be an executive at Optum, part of United Health Group, and has been on the boards of other public companies. He knows his way around healthcare, finance, and operations as well. The board wants you to vote for both of them. It needs to be approved by a plurality vote, which means the candidates with the most votes win, even if it's not a majority. We also get a look at the folks who are staying on the board for now. People such as Olivia Kirtley, Max Lynn, Steve Miller, John Rousseau, and Hunter Craig, each bringing their own expertise to the table. Next up, the board is asking you to ratify KPMG LE as their independent accounting firm for 2025. Think of this as approving the chefs who are going to check the company's financial kitchen. It gives us a quick rundown of what they paid KPMG for their services. Audit fees are the main expense, clocking in at about $3 million for both 2024 and 2023. The company also paid for tax fees and all other fees, with the total bill coming in at 3.34. Basically, they're making sure the books are clean and everyone is playing by the rules. For this to pass, they need a majority vote. The board wants you to vote for it. Now we come to the say on pay vote. This is where you as a shareholder get to give your opinion on whether the top executives are getting paid too much, too little, or just right. It's non-binding, so the board doesn't have to listen, but they usually do. They are requesting to approve the compensation of their named executive officers, such as the CEO and CFO. The board thinks their pay is just right. Finally, shareholders get to decide how often they want to have this say on pay vote. The options are every 1 year, every 2 years, or every 3 years. The board suggests once a year to keep them on their toes. The board recommends 1 year, but the vote is yours. Now let's meet the team getting paid. It's also interesting to know about these people and their background. First, there's John Rousseau, the chairman, president, and CEO. He's been with BrightSpring since 2016 and has a background in healthcare and private equity. He basically makes the big decisions. Then there's Jennifer Phipps, the Executive Vice President and Chief Financial Officer. She joined in 2017 and has been climbing the ranks ever since. She is in charge of the money. Jennifer Yala is the president of Federica, bringing over 20 years of experience in finance and operations. Bob Barnes is the president of Community Living, with experience directing healthcare operations in the Midwest. Mike McMord is the president of Hospice Services, also founding Abode Healthcare. Lisa Nally is the Chief of Staff and Senior Vice President of Human Resources, handling internal operations and HR. Now we get to the part everyone is waiting for, the executive compensation discussion. This section explains how BrightSpring decides how much to pay its top people. These are the people whose pay is being discussed. As we know already, there is John Rousseau, Jim Mattingly, Stephen Reed, Bob Barnes, Michael McMord, Lisa Nally. The philosophy is about attracting and keeping talented folks, rewarding them fairly and aligning their interests with the company's long-term goals. It's like saying, we want the best people and we'll pay them well if we all succeed. The company's adjusted EBITDA reached $588 and turned $1537 million last year. Base salary is a stable, predictable income. Bonuses are where the real action is tied to financial goals and quality. For instance, John Rousseau got a cool $1 million, while others like Jim Mattingly and Lisa Nally received $424,588 and $324,500 respectively. The annual incentives are where they get a chance to earn more if the company does well. They use something called the BHS dice, which is designed to provide each participant with a balanced scorecard. For the participant's annual cash incentive award, so it's a mix of hitting company-wide profit and revenue targets. For top guys like the CEO and CFO, a whopping 75% of their bonus depends on this. The rest depends on making sure the company is delivering quality services. To get anything, the company has to hit a minimum profit trigger. Even then, there are threshold target and maximum payout levels. For adjusted EBITDA, they got 107.23% for net revenue. That's great results. The board obviously recommends that you should vote for the approval of these high compensation. They give out stock options which vest over time to reward long-term growth and keep executives invested in the company's future. The company says that they didn't take into account any material non-public information when determining the timing and terms of equity incentive awards. Here's where the numbers get real. This table shows the total compensation for each of the top executives. John Rousseau, the CEO, took home a total of $17,673. John Rousseau got paid $18,035.553. Next, there is Jim Mattingly, $48.53. For context, in 2023, John Rousseau got paid $18,353.830.23, including a base salary of $1,053. For context, in 2023, John Rousseau got paid $18,353. Next, there is Jim Mattingly, who received $2,349.33. For context, in 2023, John Rousseau got paid $18,348, so got paid $18,030.23. For show, context, in 2023, John Rousseau got paid $18,353. John Rousseau got paid $18,030.23. $50. For context, in 2023, John Rousseau got paid $18,030.23 and $80.31. Based upon the review, the audit committee recommended that the audited financial statements of the company be included in the annual report on Form 10-K. Time to peek at who owns the most shares. KKR stockholder owns 53.1% of shares. FMR LLC owns 12.8%. And Walgreens stockholder owns 6.4%. That means these guys have a big say in what happens at BrightSpring. Also, John Rousseau owns 2.1%. Everyone filed their reports on time except Steve Miller, who was late with his initial ownership report. No big deal, just a minor administrative slip-up. KKR stockholder and Walgreens stockholder get to nominate people to the board of directors based on how much of the company they own. Also, the company will pay certain expenses of these holders relating to such registrations and indemnify them against certain liabilities which may arise under the Securities Act. KKR Capital Markets LLC, a subsidiary of KKR, got paid $7.4 million for helping with BrightSpring's initial public offering and $3.7 million for debt refinancing. We reached the end. There are some pharmaceutical and other purchase arrangements with a final paragraph on the document describing stockholder proposals for the 2026 annual meeting. Nothing special to mention here. So what's the story here? BrightSpring is running smoothly, compensating their top people well, and keeping the big shareholders happy. We saw that for 2024, CEO's compensation stays roughly the same, while other executives receive a lower compensations. The executives' goals are heavily tied to adjusted EBITDA, they hit their performance objectives for the year, and even though there was a small net profit on the same year, it does not have an impact on their performance review. So in my opinion, BrightSpring is headed in a solid direction. The high debt load is a risk, but their growth and profitability are promising. One thing to keep an eye on is the power of those big shareholders, KKR and Walgreens. In conclusion, BrightSpring seems like a company that's got its act together. They're growing, they're profitable, and they're rewarding their executives handsomely. Just keep an eye on those debt levels and shareholder dynamics. Thanks for watching Corporate Decoder. Please subscribe, like, and comment to let me know what report to decode next.